Welcome back traders to another exciting video. In this video, I am going to show you how you can use the one candlestick strategy on the 4-hour chart. Now, the first video that I posted about the one candlestick strategy on the 4-hour chart really went viral because you guys really loved the strategy, how easy it is. But you also had so many questions that went unanswered. In this video, I want to illustrate to you how you can trade the 4-hour candle for the one candlestick strategy. I want to illustrate to you how you can trade the one candlestick strategy on the 4-hour chart. Now, for those of you who don't know what the one candlestick strategy is, it is a strategy that is based on trading a continuation of the previous candle's momentum based on the prevailing market trend. What I mean is, for example, this is a bullish candle. In this example, I'm going to give you an illustration for a bullish candle, but this also does work for the bearish candle or the bearish market. The common question I have got from you guys is, what candlestick do we mark? Do we mark the candlestick that is currently open and printing, or do we mark the candlestick that is closed? Now, I've always answered you guys by saying you always mark the candle that has just closed, the most recent closed candle. But before we do that, let me show you what you have to do to trade this strategy successfully. Make sure before you start doing your markings, you have looked at the trend of the market. Is it creating higher highs and higher lows, or is it consolidating like this, creating equal highs and relatively equal lows like this? Or is it creating a downtrend, creating lower lows and lower highs, something like this, lower lows and lower highs like this? So you have to first understand what the state of the market is that you are trading. Make sure you know what direction the general trend is heading, okay? Like, for example, on a 4-hour chart, if you're marking the bullish candles on the 4-hour chart, the market should be in an uptrend if you want this strategy to work for you very well, okay? So make sure you trade in the direction of the market. I am going to show you how you can mark this and then get entries on the 5-minute chart. So what you want to do is you want to first mark the candle's close. Mark the candle's close. Bullish candle has its close at the top, and then mark the candle's low at the bottom wick here, okay? And then now the space in between them, that is called the tradable zone. You want to put there a zone of your own color. I like to use purple, but you can use any color that you like. Me, I like using purple. So after you've marked that area, you want to then go down to a lower time frame. Now, on the lower time frame, which is preferably the 5-minute chart, you want to look for the AMD pattern, which is the accumulation, distribution, and manipulation pattern. How does that work? Remember that each of these candles, whether a 1-hour, 4-hour, daily, weekly, 1 minute, any candle of any time frame that you see has internal structure which is formed on a lower time frame. For example, here this is a 4-hour candle. So inside of the 4-hour candle, there is a structure being formed by the 1-hour candles, the 30 minutes candles, the 15 minutes candles, the 5-minute candles. So normally when you want to get a bigger picture of the internal structure, you go down to the 5-minute chart or a lower time frame, okay, so that you can get a more detailed picture of the internal structure. So the internal structure of this candle may look something like this. The candle opens here, it goes down to create this wick right here like this, okay, and then it will start to create something like an accumulation. The market may move up and down like this, and then it may create some sort of a quick movement up, like to manipulate, then come back down into this range here, which was created in the accumulation, something like this. And then it will now start to create the distribution phase of the market as it distributes, goes up, creates that wick, and then closes the day on that black line on top. So the essence of trading the one candlestick strategy, which I teach in the full course free of charge here on the channel, if you watch this video up to the end, you will find that at the end of this video, I'm going to leave a link to the full one candlestick course that you can watch. If you've not watched it, watch it because I explain all this in detail, okay? So after you have looked at this internal structure of this previous candle, it's like this. So the purple zone, this purple zone right here, is the area that you want to trade, and the purple zone is usually within the distribution phase of the market, which is the body of the candle. The distribution forms the body of the candle because that is where most of the volume is created within the market. Now, there are so many other candlestick types that I explain in the full course, like a candlestick that does not have wicks or a candlestick that has long wicks. You can trade all of them in the same way by understanding where the distribution is, where the manipulation is, and where the accumulation is. But in this case, we are just using the normal candlestick. So when the next candle is going to open, you've already marked your purple zone. Now you've gone down to the 5-minute chart and you're within this purple zone. You want to wait for the next candle to come back down inside of this purple zone, something like this. Sometimes the market really goes deep inside of the purple zone. So you be patient. Wait for what the market structure is showing you on the lower time frames. Sometimes the market will give you a break of structure and then it will give you something like this. Then it breaks this structure to the upside and then it starts to continue trending to the upside. So you want to wait for market structure breaks like here, okay, for you to enter trade to go up. For example, you can wait for the market to break out in this structure right here and then retest it, and then for you get in at candlestick confirmations like a bullish engulfing, double bottom, inverse head and shoulder, whatever pattern you find within the purple zone that supports a bullish continuation. Now, when should you not trade this in a bullish setup? You don't take a bullish trade here or a buy trade when the market comes deep inside of the purple zone, something like this, and breaks the low of this purple zone and then comes back and retests it around there and then starts going down. Here you look for reversal trades to go short, okay, or to sell the market. So here the candle will have changed from a bullish 4-hour candle to a bearish candle once this purple zone is broken, okay. So all this is candlestick science that you need to understand, okay. You need to understand candlestick science for you to be able to trade this strategy very effectively, okay. But it is not a very complicated thing to do. Just understand that we are trying to trade a continuation of this bullish candle by waiting for the price to pull back into the distribution zone, which is this purple zone right here, for us to get a good price for us to continue trading long. For example, we want to wait for it to pull back in and then we continue the same momentum as the previous candle to go bullish. Now, what does that look like on a real chart? That's what we are going to look at right now. Now, the same thing I've been explaining to you is the same thing I've done here. This is a 4-hour candle which has just closed, okay. So I have marked its close and I've marked its low and I've put a purple zone in between those two lines. Now, if you've done your marking like this, make sure you also add a 20 period moving average on your chart. You see this line here? This is a 20 period moving average, this black line going up here. That moving average will help us to understand where the trend of the market is. So you can see that the market or the candles are above the 20 period moving average, which means the trend of the market is going up, it's bullish, and we have a bullish candle that has closed, okay. So we are trading in a trending market which is trending bullish. So after we've done these markings on the 4-hour chart, you are going to do one final thing. You're going to go down to the 5-minute chart and then you're going to change the candles to Heikenashi. Okay, let's go to the 5-minute chart. So what we are going to do here now is we are going to make sure we change these candles from the normal candles to Heikenashi candles. So you go here on trading view and then you are going to change this to Heikenashi. Just choose Heikenashi candles. Now these are Heikenashi candles. They help us to know the trend of the market much better. Their trend is more smoother than the normal candles, okay. So here we are going to play. Once the market reaches the purple zone, you know that this candle here, which was open before, has closed. So when the market pulls back inside of the purple zone, we look for entries, okay. So let's play on and we see. Okay, play on. Okay, Market is about to close right there. So that candle has closed. Now the next candle is going to open, and we're going to wait for that candle to come down inside of this purple zone like this. Okay, give us a break above the moving average, this 20 period moving average. These blue Heikenashi bullish bars have to break above the 20 period moving average while the price is within the purple zone for us to get an entry. And then our stop loss is going to be within the purple zone or at the most recent low, okay, for us to go long. All right, so I hope you guys are following that. Ask your questions if you don't understand. Right, so let's play along. Market goes up. Okay, now it pulls back inside of the purple zone. We're waiting for now blue Heikenashi candles or bullish Heikenashi candles to break above that black 20 period moving average for us to get entry right there. So let me zoom in so that you guys can see. Do you see that the blue bullish Heikenashi bar here? It has closed above this 20 period moving average. Okay, so we are going to take our long position here, buy position, and we're going to put the stop loss below the most recent low, which is this one here. Okay, this area right here. So this is the most recent low. So this is where our stop loss is going to be, and we're going to target a 1-to-2 risk to reward ratio. Okay, always try to target a 1-to-2 risk to reward ratio in your trading. So let's play along and see how this ends. Okay, so we're in profit. And there you go, we reach take profit. How easy is trading with this one candlestick strategy, guys? How much easier would you want trading to be? This one candlestick strategy using the 4-hour chart is the only one you will ever watch on YouTube that will allow you to be successful. This I'm telling you, if you use this strategy, I believe you are going to get wins. Yes, you will get some losing trades, but overall you will be a profitable trader once you see yourself trading consistently. Be consistent with this strategy. Don't keep on jumping from strategy to strategy. Stick to this strategy. Yes, you might get like 5 days of losing trades, but I'm telling you, by the end of the month, when you balance yourself, you're going to see that you're going to be profitable. All right, guys, I hope you've understood this. Now, if you've understood this, you've liked the content, you've gotten some value from it, please leave a like on the video, subscribe to the channel, guys. Let's grow this channel, share this video, and if this video gets 1,000 likes, I am going to give you guys a full course of this strategy in more detail than even the course that I gave you guys at the beginning of this year. I hope you guys will take value and like this video. Thank you guys for watching. Until next time, peace and out.